Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. In our community, we know that to win in investing, you must take risk, but to win big, you've got to reduce it. Ladies and gentlemen, I'm on a mission to help 1 million people reduce risk in their lives. To reduce risk in your life, go to myworstinvestmentever.com today and take the risk reduction assessment I created from the lessons I've learned from more than 500 guests. Fellow risk takers, this is your worst podcast host, Andrew Stotz from Amy, and I'm here with featured guest, me. I'm going to follow up the last podcast that I talked about last week when I talked about 12 barriers to gaining financial independence. Today, I'm going to follow that up with 12 steps to financial independence. These are the steps that I laid out in my book, How to Start Building Your Wealth Investing in the Stock Market. You can come to, I'll put a link in the show notes where you can get that book either on Amazon or you can attend the online course that I have, How to Start Building Your Wealth Investing in the Stock Market. I'll have all that in the show notes. So let's get into it. 12 steps to financial independence. Number 1, create a plan and follow it. Be one of the few people who has a financial plan, and keep that plan simple, because a plan that is not simple just won't be followed. You've got to have a simple plan. In the course and in the book, I go through how to set up that plan. Number 2, keep investing simple. As I like to say, wear your financial seatbelt when you're investing. In other words, diversify by owning at least 10 stocks. And if you're going to own more than 10, you might as well just own some sort of ETF or mutual fund. Step number 3, start early. Time really is money. Start now to benefit from decades of compound interest. If there's one lesson from Warren Buffett, well, that lesson is that you should be growing your wealth over decades. He's had his money in the markets for maybe 70 years, roughly. So he's allowed the market to compound over time. You should start early, start now, and get that time on your side. Number 4, get real about stock market returns. My point is, running a business can make you rich. Saving a lot every single month can get you a lot of money. But the market is for growing your wealth, not creating it. So think about it this way. You won't get rich in the stock market until you change the way you think about it. The way you want to think about getting rich in the stock market is actually just letting time work for you. And that's the reason why at the end of this podcast, I always say, helping us create, grow, and protect our wealth. When I say create, I'm talking about the two main ways that you can get wealth. Of course, there's a third one, which is just inherit it. But for those people that are creating wealth, we either create wealth when our companies make a profit and we own those companies, or when you can keep your expenses deeply below your monthly revenues. The gap between that, or your monthly pay, the gap between that is ultimately a creation of a cash flow. Number 5, do it yourself. Remove the guesswork, buy a passively managed index fund or ETF. Do it yourself. You don't need a lot of support in doing that. I teach about that in the course and with the book. Number 6, I had a very strong debate with a good friend of mine, Eric, about this particular one. He didn't like it. He thinks just the opposite. And I think the world thinks just the opposite, but I'm going to tell you number 6 is avoid mistakes when you're young. Now, everybody says, no, make mistakes when you're young. You can recover from it. Well, my point is, don't wait. Start investing now. Nobody's going to do it for you. You've got to get started right now. And don't make any silly mistakes with your money, because if you don't, that money will compound for you over decades. But if you make mistakes, that money's out the door and you don't get the compounding of it. Number 7, build wealth through savings. Take pleasure in spending much less than you make. Ultimately, it's the number one way that we're going to get wealthy is when a company or an individual is spending a lot less than they take in every single month. Take pride in that. Keep your life simple. Simple car, simple house, simple apartment. I've been in the same apartment now for 20 years. I do not need something big and complex. All right, number 8, Keep financial costs low. Fees and taxes low with a passively managed index fund. When I talk about taxes, every time you sell at a profit, you're going to pay taxes. But if you can hold for a long time, you're deferring that tax and allowing the money to compound. Number 9, diversify to reduce risk. You want to achieve diversification through a passively managed index fund that owns all stocks in the world. That's pretty much the simplest that you could do stock in the world. The benefit of that is when you go out to a party and someone says, I own stock XYZ in America and it went up by 50%, you can say, I own that stock too. And then when someone else in the party says, I own this stock, it's a very strange stock, nobody's ever heard of it in Taiwan, you say, I own that stock too. Why? Because you own every stock in the world through that passive fund. All right, let's continue. Next is number 10, own both bonds, stocks, and bonds, right? Own stocks in a ratio of what I say 110 minus your age, the rest in bonds. So if you're 20 years old and you say 110 minus 20, that means that 90% of your money should be in stocks, only 10% in bonds. Of course, if it's your first 10 years and you're young and you're growing, I don't think there's anything wrong with going completely 100% stocks, but as you start to get older, you want to start to blend in those bonds. Number 11 of 12 steps to financial independence, trade infrequently. Reduce action to reduce costs and reduce mistakes. You heard the saying, don't just stand there, do something. Well, I like this saying, don't just do something, stand there. Number 12, stay invested and watch it grow. In the long run, stock markets bounce back. Trying to time the market is a loser's game. Those, ladies and gentlemen, are the 12 steps to financial independence. You can come to the website, myworstinvestmentever.com. Come to this episode. I've also have it in show notes on the iTunes. You can click on that and you can download that and print it out and put it on your wall to remind yourself to follow those 12 steps to financial independence. And if you want to get started, just go to the show notes and I'll have a link to the course or to the book and dig in and you can learn a lot. All right. That's a wrap on another great story, in this case of mine, to help us create, grow, and protect our wealth. Fellow risk takers, let's celebrate as we move to helping 100 million people. 100 million, my God, it just grew. 1 million people reduce risk in their lives. This is your Worst Podcast host, Andrew Stotz, saying, I'll see you on the upside.